Hello and welcome. Before we start, please make sure to subscribe to our YouTube channel for news and updates. Although markets have performed well this year, some investors may be nervous about upcoming events such as the presidential election, the Fed's next rate decision, and the state of the economy. Along with the uncertainty of the past few years, it's no wonder that gold prices have also risen to record levels above $2,600 per ounce. While gold can serve many important purposes, some investors may focus on it as a standalone investment rather than a well-constructed portfolio component. In today's market environment, what role should gold play in long-term investment and financial plans? Understanding the relationship between gold and other asset classes is critical as markets continue to rally. Gold and stocks can behave differently across market environments. The case for gold really depends on the portfolio objective. Across economic environments, gold can serve at least two investment purposes. First, as a precious metal with consumer and industrial uses, the value of gold can rise over time due to limited supply and steadily increasing demand. It's also clear that many investors flock to gold for safety when markets get choppy. In many ways, this is no different from how some investors view cash or bonds, as a tool to protect their portfolio from short-term market swings. Unlike cash and other safe haven assets, however, gold does not generate any portfolio income. Thus, it's important to distinguish between gold as a one-off investment and as a part of a portfolio tailored to achieve financial goals. It's important to note, the stock market outperformed gold, just as it has against most other asset classes. Of course, constructing a portfolio is not just about investing in the best performing asset, it's about diversifying to create a smoother ride and to meet financial objectives. Thus, while gold may be attractive to investors for a variety of reasons, it's always important to view it with respect to other important asset classes, including stocks and bonds. Falling interest rates can make gold more attractive. Why have gold prices risen recently? Gold can perform well when interest rates decline, since lower rates on bonds and cash make gold, which provides no yield, more attractive on a relative basis. Specifically, the Fed tends to cut rates to spur economic growth, which can be the result of an economic slowdown and can also be viewed as inflationary. Both scenarios can be positive for gold as a store of value and hedge against rising prices. However, it's important to keep in mind that ongoing rate cuts tend to also be positive for stocks and bonds. While gold has experienced a strong rally and is hovering near all-time highs, it's important to keep its relative performance in perspective. Many other assets have performed well this year. Thus, like all asset classes, gold is perhaps most valuable as part of a diversified portfolio rather than as a standalone investment. The accompanying chart shows that many asset classes, including international stocks, small caps, and more, have contributed to the performance of broad market indices this year. Geopolitics, the election, and other investor concerns will continue to drive markets. Rather than focus on individual asset classes, it's more important to construct portfolios that can withstand evolving market conditions. Ideally, this should be done with the guidance of a trusted advisor. History shows that while investor worries come and go, the principles of long-term investing remain the same. The bottom line? Gold's recent rally can be attributed to Fed rate cuts, geopolitical tension, and fiscal concerns. Investing in gold or any alternative asset should be considered in the context of a well-diversified investment strategy rather than as a standalone investment. Thank you for listening. For additional information, please visit MRAadvisory.com.